Welcome back to Finance Uncut. On today's episode, gold and silver demand is skyrocketing, and get ready for a war on cash. We agree with this article from Barron's that gold has gotten crushed, but that's about to change. And in this video, I'm going to show why I believe that the price of gold has bottomed and that we're about to enter a very exciting bull market. And if that's good for gold and gold goes on a bull market, then that is great news for silver.
Second quarter is already looking better for gold. The precious metal was up almost $50 during the first week of April as it moved past its key resistance level of $1750. But what happens next is critical. Can gold finally hold above this level as analysts cite strength in the metal's latest move higher? Let's take a look at our top 3 stories from this week. Number 3. After putting brakes on official gold purchases, central banks are once again interested. Hungary tripled its gold reserves to 94.5 tons. This was one of the biggest official gold acquisitions in decades. The central bank referred to gold as one of the most crucial reserve assets, as it cited new risks coming from the coronavirus, including massive global debt and inflation. Number 2. Gold coins are in high demand as buyers are taking advantage of lower prices. In fact, US Mint just saw its best start to the year in more than 2 decades. Latest data revealed that the US Mint sold more than 400,000 ounces of the popular American Gold Eagle coin, which is up nearly 90% compared to last year. Number 1. Real assets appear cheap, says Bank of America, added that it might be time to finally splurge on diamonds, precious metals, real estate, art, vintage cars, and other collectibles. Real assets are at their lowest level since 1925 relative to financial assets such as stocks and bonds, the bank said. Thanks for watching, and for more precious metals news, check out Kiko.com.
Gold has multiple sources of demand aside from direct use as a store of value. Gold's largest source of demand is the demand for jewelry. And you can see this little graph on the right here, the global gold demand from 2019. You can see almost 50% of the demand for gold was for jewelry, with right on 20% investment demand. And then down the bottom, you can see central banks and other institutions at about 15%, and then investment ETFs and similar 9%. Hopefully, with the education that's happened in the last 12 months, people avoid using those ETFs unless it's the Sprott ETF, which is another whole different ball game. And it is still used in technology, in different technologies, which is 7.5%. But I'm going to share now a little video, a short little clip from Wall Street, from Main Street, on the huge demand for gold and some really interesting things that have happened with gold from India and also China.
Over the last couple weeks, we are starting to see even more evidence that physical gold demand is starting to come back into the market and increase in Asia, China, and India. Now, I have already covered the enormous physical demand surge in India, up 471% in the month of March compared to a year ago. However, this Reuters article that came out in the last couple weeks is showing that Swiss gold refiners sent physical gold to mainland China in February for the first time since September, and shipments to India and Thailand are rising to multi-year highs. People are buying the dips, this smash in the paper price. So in spite of paper price smashes in the US dollar, gold, and silver prices, the Asian, Chinese, and Indian physical gold buyer is starting to come back into the market. And that is a good sign because I've been covering gold and silver for over a decade now. And normally when there is very big demand spikes for physical coming from India, China, Asia, the paper price bottoms over the course of a couple months. And this has been the case for a long time now, where big physical demand increases sustained over months put bottoms in the manipulated, smashed paper price.
And in recent news, the Hungarian central bank has boosted gold reserves by 3,000% in less than 3 years. The National Bank of Hungary, as I said, 3 times their gold reserves. In a statement, they said, as it carries no credit or counterparty risk, gold facilitates reinforcing trust in a country in all economic environments, which still renders it one of the most crucial reserve assets worldwide, in addition to government bonds. Well, I think they're just being nice there, but we are seeing China buy gold like no tomorrow. I've done previous videos about Russia buying gold again, and Russia now has more gold than they do US treasuries as their reserves. So central banks, current countries, nations, they're seeing the risks out there in the paper market, in the bond market. They are looking at their reserves. I think the National Bank of Hungary right here really explains it well about gold not carrying any counterparty risk, and it reinforces trust in a country's economic environments. So they've increased their gold reserves to 94.5 tons, and once again, they just a little snippet of their statement. Although from a monetary policy perspective, gold lost some of its significance in the 1970s, obviously when Nixon closed the gold window. Its role as a traditional reserve asset remained pivotal thereafter. And I'll put a link in the description below so that you can actually go and read the full statement from the Hungarian National Bank.
Paper prices for gold briefly popped above $1,750 an ounce for the first time in months. The overhead resistance at $1,750 by the bullion banks and the paper price manipulators is still fairly strong, so it did not stay above $1,750 today. But eventually that is definitely going to happen because demand for physical metal is very strong. We're seeing an increase in physical demand, especially for gold, out of India, China, and Asia. Also, gold coin sales at the Perth Mint have exploded in February and March. They've made consecutive highs in both February and March. So you had a high in February and then another high recently in March. And then combine that with how it looks like the dollar index, after a brief rally the last 4 to 6 weeks, may finally be done, as the budget deficits here in the US for the month of March just keep growing. It is nuts. Even though the Fed's balance sheet hasn't really done much in the last couple weeks. But it is only a matter of time before the Fed's balance sheet explodes much, much, much higher, given how there's very little foreign demand for U.S. Treasuries. John Adams at Adams Economics, he's out of Australia. He's been doing amazing investigative journalism. This is the type of journalism that the mainstream financial media should be doing and is not doing. He is talking about all the shenanigans, all the games, all the fraud and corruption going on with unallocated accounts at the Perth Mint and Kitco, as well as in London and other bullion banks. So he's been reaching out to his contacts and getting information. It is truly amazing. So take a look at his Twitter. I'll put a link to his Twitter if you want to take a look. Also, there's a hashtag on Twitter, Perth Mint Default. So if you want to search under there, really since March 20th and onward over the last 3 or 4 weeks, there's been an increase in the amount of stories coming out about fraud going on at the Perth Mint with unallocated accounts. We're starting to see even more stories about unallocated accounts and the lack of actual metal at places like Kitco too. So it just shows you of all the paper games and how manipulated gold and silver markets are. But there is a lot of physical demand, whether that's the Perth Mint or big increases in physical demand coming now from India, China, and Asia. So that is what's going to start putting in the bottom in the paper prices. Normally what happens in gold and silver, and I've been in these markets now, and I'm using air quotes here, for over a decade. Normally strong physical demand surges of buying from India, China, Asia. Within a couple months, they put a bottom in the paper price. So that is what has happened over the years, is big increases in physical demand overwhelm the paper price manipulation, and the paper price manipulation becomes less effective. And then the bullion banks and the other paper price manipulators, they do a managed retreat, as James Turk of Gold Money calls it, and then they allow the paper prices to start going back up again, and then they try to defend the manipulated paper, gold, and silver prices at different price levels. So I expect that to happen, especially if demand for physical metal continues to be robust or increased, whether that's with Perth Mint and they're having trouble sourcing physical metal. From what it looks like, what John Adams has gathered, how they may be sourcing physical silver from China that they claim to have in the vault, with all these unallocated accounts and fractional bullion banking or something similar, since they're not technically a bullion bank. But you shouldn't trust any of these large banks that are bullion banks, or any of these large private mints that are going to store your metal for you. And that's the bottom line. So if you don't hold it, you don't own it for the most part. The only physical metal trusts that I trust are the Sprott Physical Silver Trust, the Sprott Physical Gold Trust, the Sprott Central Fund of Canada that they bought that has a 50-50 mix of gold and silver. And I think Sprott also has a platinum and palladium metals trust now. So the Sprott Physical Silver Trust, yes, you need a lot of units to take delivery of the metal, but they actually do reliable independent audits. So you know the metal's there with the serial numbers, and there's a lot of tax benefits to buying and holding those units on paper price smashes. And the other major story I wanted to talk about was the amount of physical silver from the Sprott Physical Silver Trust. So we're way over 130 million ounces. In only 14 months, 73 million ounces now have been added to the Sprott Physical Silver Trust. That is an enormous increase in physical metal. And so far, the amount of physical metal, even though the paper price for silver is barely holding above 25 when I'm recording this short little video, it did peek its head quite a bit above 25 yesterday, but there was paper price smashes today on Friday, April 9th. But the Sprott Physical Silver Trust has not sold any physical silver yet. More physical silver is still coming in, as the total physical silver assets under management, the silver inflows, is still increasing.
In Jim Rickard's latest article, War on Cash, the Next Phase. Now, I'm not going to go through this article right now. I'll put a link in the description. You can read it yourselves. And it's basically about central bank digital currency, the move away from cash, and all the consequences that will entail regarding inflation, regarding privacy, etc., etc. Now, it's not just Jim Rickards that is warning about this. Many people are. George Gemin is, Jason Burak, and also Professor Richard Werner. Bank of Japan, one of the bank regulators in Japan, moves towards stepping into the arena to compete with the banks it regulates by preparing to offer direct current account to the public, name CBDC, to get you off track. So central bank digital currency there. And what's interesting is we have this reply. Meanwhile, in India, the RBI just gave payment wallets a bigger seat on the table, participate in central bank transfer and settlements, withdraw cash from ATMs, etc. Basically function as bank accounts for the mass consumer base. And what does it all mean? I think Professor Werner says it best in this tweet. ECB now officially seeks to engineer a sustainable rise in inflation. Accelerating inflation is sustainable as long as it keeps accelerating, and as long as the ECB bans cash right there and introduces digital currency, which means your account can be easily great reset. Buckle up. So the ECB, India, Japan, China, US, this is the future, folks. Central bank digital currencies. If you don't know what the Great Reset's all about, you need to go and have a look at it. The World Economic Forum. I've done a video on it. I'll put a link in the description below. You definitely want to have a look at that. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. Hit that like button if you haven't already. Hit the subscribe and notification bell. Take care, everyone, and I'll see you again on another episode of Finance Uncut.